Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Guys, this stock dropped 8% after earnings. The floor was falling out for it. But guess what? That's not stopping this guy from buying. I am loving this almost dividend aristocrat even more as the price continues to fall.
Smash that subscribe button, guys. Give us a nice thumbs up. Stock has dropped. Earnings have been heavy, hot this past week and a half, guys. I know my phone actually has been blowing up now that majority of my stocks are on SoFi. I'm actually getting great earnings release
Yeah.
notifications and how they beat and all of that stuff. So it's been very, very nice.
Yeah.
As we're filming this, the Pistons are playing the Knicks.
Hmm.
The Knicks just hit a three with 4 seconds left to go. So they're up three. But this is not about them. This is about this stock that Bert really likes, guys. A stock that I think you guys will really find some deep value right now because this price to earnings ratio is 12, less than 12 times earnings, and is significantly less than where they currently trade at.
So who are we talking about? We're talking Qualcomm, ticker symbol QCOM. You follow your boys here at the Diplomats on X. You'll know that I've been buying here. Today, May 1st, I grabbed 2 shares of Qualcomm. Yesterday, I grabbed 1 share. So I've added 3 ever since the stock has been falling. Let's go through the earnings release here. Super high level, everyone, very fast. Revenue for the quarter was up 15%. Earnings per share. Oh yeah, and the revenue was at 10.8 billion. Earnings per share was 285, up 17%. So you saw some very, very strong results here. And that wasn't just it, Lanny. Their guidance came in very strong as well. Their guidance came in very, very strong here. They're expecting revenue to be between 9.9 to 10.7 billion going forward into the next quarter. Earnings per share from 260 to 280. And
Solid.
you're seeing a huge chunk of that come from that handheld division. That QCT revenue is what they call that division, which includes phones. It includes their automobile sector, which all, by the way, experienced double-digit percent growth on each of those individual units. They're expecting between 8.7 to 9.3 billion in revenue, a year-over-year growth rate of 12%, Lanny. So they're just firing on all cylinders. They beat on earnings, they beat expectations on revenue as well and earnings, and they increased guidance, Lanny. But the market just wasn't hating it. And the funniest part was even analysts couldn't figure out why. There were a lot of articles that said analysts can't figure out why the Qualcomm drop was so steep.
I wonder if it's because they really are truly, showing up naked here by saying we're so exposed to this market. We're aware of it. We're trying to fix it despite beating, despite raising guidance. Maybe they're just like, hey, we're so concentrated here. Maybe that's what's spooking the investors. And it could just be, hey, maybe large pools of investors are exiting this industry as well, looking for something else.
Yeah.
Again, just not to say look at the price of Bitcoin at 97,000. Who knows? Again, who
Yeah.
knows?
And to your point, like, tariffs are hitting the semiconductor hard and they're very exposed to handhelds. And we don't know what's going to happen with the handheld sector. We don't know exactly how things are going to shake out. So you're right, Qualcomm is exposed. Interesting thing though is management did drop a little nugget in there, Lanny, because we said of that the $10 billion guidance they're expecting, 8.7 billion in that handheld. They have a goal by 2029 to get revenue and deliver diversification away from that handheld sector and have non-handset revenues up to 22 billion by 2029. And sure, that's a long way to go, but if you can diversify away, you can insulate your business from market fluctuations like this or things such as tariffs that might leave you exposed in the short term. That would be huge for Qualcomm.
Right. Yeah. I mean, no argument there. But guys, it's, I think when you look at the metrics, I think you're going to see why there's a lot of value here with Qualcomm. Again, a huge player. They are over 160 billion in market cap, guys. Again, trading at $135.21. Again, dividend investors here. Bert, you own a lot of shares of Qualcomm.
Yes, I do.
You got a nice sizable position. And, again, being down 17.5+% in the last year, 12% down this year. It's really, really giving you a discount to the market.
Yeah.
But let's run them through the Dividend Diplomat stock screener, guys. The price to earnings, the payout, the dividend growth. The dividend yield's looking really solid here when you pair that up with the dividend growth. So very excited to check this out.
Yeah, and just jump in. I've been looking up here while if you see me looking away at my second monitor there to see, you thought I would have had prepared how many shares of Qualcomm I own. After that recent purchase, I have 44 shares, so a market value of just under $6,000. So it's a pretty substantial position. I'd love to get that to 50, but that's a story for 2 minutes or so from now. Let's run one
Wow.
through here. Let's look at the metrics here. The price is 135.21. Forward earnings are 11.79. As you said earlier in the video, Andy, you said that PE ratio is below 12. It's below 11 and a half. It's 11.47x, which is below their 5-year PE ratio on Seeking Alpha of 18. So a heavy discount to the market and their historical mark.
That is huge. Wow. And then when you look at the dividend, guys, again, paying $3.56 over the year, obviously spread over throughout the year. A very safe dividend payout ratio, guys, at 30%. Room to pay, room to grow, and growing is exactly what they've been doing.
Yeah, that 5-year growth rate is 6.51%, and they've
Oh,
increased that dividend for 21 consecutive years. So they're almost at achieving dividend aristocrat status.
and the dividend growth might not seem like it's that large, but again, this is a hardware tech based
Mhm.
company here, so they need the cash flow, to continue to reinvest, to continue to
Yeah.
again diversify away from that segment and continue to again research and develop new chips.
That's right. And that yield is now 2.63%, Landy, now that that price has fallen so much of late. So it's crazy. It's over 2.5%. It'd be wild if it gets to three.
Yeah, definitely getting over 2.5x the S&P 500. You pair that up with that 6.5% growth rate, so you're over at 9.1%. You've got to really, really like that. Now, Bert, again, up still 79% in the last 5 years, doing very, very well. Have you been buying shares at the 135 range?
Yeah, that's been where I'm buying it. I like it at this range, Lanny. As I said, I bought three this week right around this price. I'm buying, I'm at 44 shares. I think a good goal is to at least get this to 50 while I'm seeing prices in the 130s over time. I think that would be a nice, solid position. Whether it's through consolidating other positions or just slowly sprinkling in one or two extra shares, I think that's what I'm targeting. 50 shares at Qualcomm. I love them at this price. If they continue to drop, they hit that 3% yield mark at 119. I'll be scooping up more.
Wow, I like it, guys. You know, I, I'm looking at my portfolio. I think I have to look at the balance sheet maybe next time we look at them, which we can peel them back. We'll have to do another recap on Qualcomm. Definitely think this is a great stock to have in the portfolio. If I were to exit maybe a few stocks, I might be interested in entering Qualcomm as well, just to get a little bit of exposure, away from Intel,
Yeah.
especially, guys.
Yeah.
Just remember that.
Yeah. I'm
Ooh,
with
maybe
you.
that's an easy way for you to get there too.
Yeah, I do have in the same portfolio those 36 shares of Intel for $700 that are just sitting there, not doing much clearly. So maybe I consolidate that, move it into Qualcomm. Everyone, I'd love your opinion. What do you think of Qualcomm right now? Ticker symbol QCOM. Are you buying? Are you liking? Or are you waiting for that 3% yield mark around 118 per share?
Yeah, let us know in those comments, guys. Let us know what other stocks you're buying right now here in the stock market in 2025. Again, keep investing, keep saving, build that passive income stream. Bert, hit him with that sweet chin music.
You're either with us or you're against us, Jack.
That was Bert the Herd and Lanny from the DD over and out.